Hey everyone, welcome back to Delta Edge, your ultimate guide to the stock market. Today, we're diving into an essential topic for all investors: mutual funds investment. Mutual funds can seem complex at first, but with the right guidance, they become one of the most powerful tools in your investment arsenal. In this video, we'll break down what mutual funds are, the benefits they offer, the different types available, and how you can start investing in them today. By the end of this video, you'll have a clear understanding of how mutual funds can help you achieve your financial goals. Ready? Let's dive in. All right, let's start with the basics. What exactly are mutual funds? In its simplest form, a mutual fund is an investment vehicle that pools money from multiple investors to buy a diversified portfolio of stocks, bonds, or other securities. Think of it as a financial potluck where everyone contributes, and the result is a well-rounded meal curated by a professional chef. So, who manages these funds? Professional fund managers take on the role of that chef. They aim to generate returns for the investors by carefully selecting and managing the portfolio's assets. The beauty of mutual funds lies in their ability to offer diversification. By pooling money together, mutual funds can invest in a wide range of assets, spreading out risk and potentially leading to more stable returns. Another key aspect of mutual funds is that they are typically open-ended. This means you can buy or sell shares of the mutual fund at any time, giving you flexibility and liquidity. It's a convenient way to invest, especially if you prefer having the option to access your money when you need it. In the next chapter, we'll dive into the benefits of investing in mutual funds and why they might be the right choice for you. Let's move on to the juicy part: the benefits of investing in mutual funds. First and foremost, one of the most significant advantages is instant diversification. By investing in a mutual fund, you're essentially spreading your money across a wide range of securities. This helps mitigate risk because your investment isn't tied to the performance of a single asset. Another major benefit is professional management. When you invest in a mutual fund, you're entrusting your money to experienced fund managers. These professionals have the knowledge and tools to analyze market trends, assess risk, and make informed investment decisions on your behalf. Liquidity is another appealing feature of mutual funds. Most mutual funds are designed to be easily bought and sold, providing you with flexibility and access to your money when you need it. Moreover, mutual funds are accessible to a wide range of investors. With various mutual funds available, you can start investing with a relatively small amount of money. This accessibility makes mutual funds an excellent option for both new and seasoned investors looking to grow their wealth over time. One more benefit worth mentioning is the option for automatic investment and dividend reinvestment. In summary, mutual funds offer a combination of diversification, professional management, liquidity, accessibility, and investment options that make them a compelling choice for investors. Now that we've covered the benefits, let's dive into the different types of mutual funds available. Understanding these categories will help you choose the right funds for your investment goals. First up, we have equity funds. These funds invest primarily in stocks and are designed for growth. They have the potential for high returns, but come with higher risk. If you're looking for long-term growth and are willing to ride out market fluctuations, equity funds might be a good fit for you. Next, we have debt funds. These funds invest in bonds and other fixed-income securities. They are generally safer and provide regular income, making them ideal for conservative investors. If you're looking for stability and a steady stream of income, debt funds might be your go-to option. Balanced funds, also known as hybrid funds, are another category worth considering. These funds invest in a mix of stocks and bonds to balance risk and return. They are suitable for those looking for a moderate risk-reward balance. Index funds are another popular type of mutual fund. These funds track a specific market index, like the S&P 500 or Nifty 50. They are passively managed and usually have lower fees, making them a cost-effective option. In the next chapter, we'll walk you through the steps to start investing in mutual funds. All right, you're convinced about the benefits and types of mutual funds. Now, let's get into the nitty-gritty of how to start investing in them. The first step is to set your financial goals. Determine what you want to achieve with your investment, be it saving for retirement, buying a house, or building an emergency fund. Having clear goals will guide your investment decisions. Next, assess your risk tolerance. Understanding how much risk you're willing to take will help you choose the right type of mutual funds. Are you comfortable with market volatility, or do you prefer steady, predictable returns? Your risk tolerance will play a crucial role in shaping your investment strategy. Once you have your goals and risk tolerance figured out, it's time to choose the right funds. Research and compare different mutual funds. Look at factors like past performance, expense ratios, and fund manager experience. After selecting the funds, you'll need to open an investment account. You can invest directly through fund houses, banks, online investment platforms, or financial advisors. Decide how much you want to invest and whether you prefer a lump sum investment or a systematic investment plan, SIP, to invest regularly. Once your investment is set up, it's essential to monitor your investments regularly. By following these steps, you'll be well on your way to building a robust mutual fund portfolio. You've set up your investments, but how do you ensure long-term success? Here are some tips for successful mutual fund investing. First and foremost, diversify your portfolio. Spread your investments across different types of mutual funds to reduce risk. Diversification helps cushion your portfolio against market volatility and enhances the potential for stable returns. Stay informed about market trends and fund performance. Regularly review your investments and make adjustments as needed. This proactive approach ensures that your portfolio stays aligned with your financial goals and risk tolerance. Be patient. Mutual funds are generally better for long-term investing. Stay invested and avoid making impulsive decisions based on short-term market fluctuations. Market ups and downs are normal, and it's essential to remain focused on your long-term goals. Take advantage of automatic investment and dividend reinvestment options. Automatic investment plans help you stay disciplined and committed to your financial goals. Dividend reinvestment programs allow you to reinvest your earnings back into the fund, compounding your returns over time. Regularly review and rebalance your portfolio. As market conditions change, your portfolio's asset allocation may shift. Periodic rebalancing ensures that your investments remain in line with your original strategy and risk tolerance. Consider the tax implications of your investments. Different types of mutual funds have varying tax treatments. Be mindful of how taxes can impact your returns and consult with a tax advisor if needed. Keep an eye on fees and expenses. High fees can eat into your returns over time. Look for funds with reasonable expense ratios and be aware of any additional fees that may apply. By following these tips, you'll be well equipped to achieve long-term success with your mutual fund investments. If you found this video helpful, give it a thumbs up and subscribe to Delta Edge for more insights into the stock market and investing. And don't forget to hit that notification bell so you never miss an update. Got questions or thoughts about mutual funds? Drop them in the comments below. Mutual funds offer a wealth of opportunities for investors looking to diversify their portfolios, benefit from professional management, and achieve their financial goals. With the right knowledge and strategy, you can make mutual funds a cornerstone of your investment plan. Thanks for watching and happy investing. Stay tuned for more videos here on Delta Edge, where we empower you with the tools and knowledge to navigate the stock market with confidence. Until next time, take care and keep investing wisely.